Good day, everybody. Still here. It's Tuesday, February 4th, 2014. It's the Daily Market Pulse, of course. Stocks bounced a little bit, moderately. Lower volume, however. Um, no major buyers stepping in. Volume down. We're still in a correction. Still going to likely see more downside, I think, even though there's a little bit of a bounce, a little bit of a candle formation that tells you that probably things are slowing down in terms of selling. I don't think I'm seeing necessarily anything that's capitulatory, anything that is really a panic, a true panic sell. Yesterday was pretty panicky, but not quite to the level we'd want to see it for a true bottom. So I'm thinking we're still going to be seeing some downside at some point. So let's go look at the charts. Okay, Dow Jones, you can see the big flush. It actually came through that support level yesterday, through the Bollinger Band into the 200. Lower trend line you can see there as well. Now that I think about it, I think I forgot still to change some of those lines today. I was too preoccupied. But anyway, you see a little bit of a bounce there. A little Harami. Harami is, yes, it's a bullish reversal candle, but really it's not one of the most strongest of reversals. It's more of a slowing down. Sellers may have stopped or slowing down. So we may still see a little of a bump up, but I'm not really anticipating a whole lot. And even if there is, I think it's an opportunity to consider selling into it. So with that said, we're looking for more downside at some point, and more downside may mean 14,800, or it could happen right here. It could just be a big flush. Maybe you see a hammer, maybe you see a bull sash formation, or a bullish engulfing, or something of the sort, similar to what we had a while back. Here we had a morning star a while ago, back in October. Prior to that, it was a little odd. You see that it was not a real strong bullish series here in reversal. Of course, it reversed all the way back down to retest that low, and that's why it wasn't a true reversal. Down below here, the morning star was in October. That was a better reversal. Down here as well, to some degree. You see there's another Harami with a flush lower, and then a reversal. But then again, see, it didn't go very high before it came crashing back down to that same level again. So, anyway, with that said, let's go to the S&P. So S&P is still in the channel. You can see the same thing, kind of a Harami formation there outside the Bollinger Band. A little bit of a positive divergence here in the Dow as well as the S&P on the stochastics. It's a little bit on the rising side where prices are still going lower. So you'd expect maybe a little bit of a bounce, a little bit of a short squeeze. Question is how high. Right now 1775, 1780 would be the target, just because that's where the polarity area was. That was support. That will now be resistance. The 8 moving average is there as well. The 20 is declining, the 50 is starting to decline, but the 20, if the crosses below, may weaken things at least temporarily that much more to the downside. We'll see how long it lasts. But essentially that's where we are with that. Again, if on the downside, this starts to flip lower through the window here of 1735, right there. Then again, like the Dow, you're looking down here at 1660 probably, maybe 1700 as we've talked about before regarding the 200-day moving average. Okay, so NASDAQ. Okay, NASDAQ, see there's your Harami again. Big flush to the downside. There was your polarity area where the gold line is. Went into the 38.2 retracement, flushed lower, and a little bit of a divergence again on the stochastics relative to price. If it flushes lower, where are we going? Probably the next window, 3900 to 3875. Then we reevaluate again. TSX for our fine Canadian friends, another Harami here as well, into the 50-day moving average. Polarity areas, remember that area 13,500 was critical. I thought there'd be a bounce there just because psychological level, former polarity area, but if it fades, it's going to fade hard, and it's got room to 13,100. Again, another little divergence, stochastics rising while the prices are still going lower. So again, a little bit of a bounce percentage-wise, who knows where, maybe as high as 13,750 again, but the halfway point of yesterday's candle would be one of the places to look, like 13,600 maybe. But it may just fade from here. Hard to say. Let's see, what do we got? Let's go to the New York Stock Exchange. Forget that, I pass. So let's go right to the U.S. Canadian dollar. You see a little bit of a rollover, a little bit of a flagging-like formation here. So it's just consolidating into the 20-day moving average, most likely with the 110 area. Then look for maybe support at that level. Treasuries, we had talked about this. It broke through the 134 resistance target area, of course above the 200, the 8 moving average crossing over as well, so the short-term trend stronger. but we'd expect that maybe it was going to come back right away because of the steepness of this move. And what it's been doing overall anyway to this point is that it might pull back at least to test the former resistance, now support, the breakout area at 134, which it did. A little bit of a bounce going on right now. It looks, when I'm looking at intraday charts, it looks like it's got a little bit of a rounded bottom formation developing here. So we might be seeing the right side form. We might see this thing surge higher back into 135 plus. So this might be a temporary pause, looking for higher levels still. Japanese yen has run into its target area. That we see that blue shaded area essentially. Not quite, but got real close. It pulled back today. Now it's holding. 8 moving average crossed over the 50. 20 is fast approaching. So the trends are getting stronger, looking for a breakout above and into the 1 area, 0.01000 area, and through the 200 target, ultimately into the 103 to 104 area. Okay, and gold, 20 cross over the 50, holding the line. It's just right now stuck between 1280 and 1235, 1245, and that's about it. Overall, it still looks like it has a more of a bullish look and feel, but it's got to get over 1280. Once it does that, then it's got next target of 1340 to 1360. I can go to silver, I suppose, and silver is just kind of going sideways along the 19 level and bouncing a little bit. Gold is clearly stronger. You can see here it's had a bullish engulfing today. Now it's looking to maybe go a little higher. So if anything, into 20 and then maybe into 2050. So that bullish engulfing, at least if history repeats itself, that candle there will allow this to go higher. And if it does go into 20, then it's closed now with, as a rarity. It's now closed above the moving averages. Before that, look at where the 50 and the 20 and the 8 were. Now they're kind of all clustered together. That usually means a move is coming. That could be to the downside or to the upside. So caution here, of course, anything below 19, but ideally I think we're looking at 20 to 2050 to the upside. And then crude is a little bit confused because we got the 20 below the 50, but now the 20 is starting to rise again. So they're all rising. 8, 50, then 20. They're a little confused, but now it's got a shot and chance to maybe get back toward 99 and maybe 101 plus. So it's just been having to work the numbers here a little bit, wait for these moving averages to kind of catch up as it's been going sideways, because it had a nice run from 91 to the point where it hit 99 or 98 anyway. So looking for more upside ultimately, but it's still kind of working its stuff here to try to figure out what it's going to do. There's a little bit of confusion, but at least it's above the moving averages still. Probably natural gas worth looking at with the shortages everywhere. It was a huge move to the upside, if you recall, and then a huge slip and back toward the breakout area 5, held there for a couple of days, and then the huge bounce today to the upside. So this is looking for more upside most likely, since the stochastics is reset. And with small caps, of course, the fact that there's a it's risk on, risk off. It's definitely risk off based on everything. The same pattern we've seen with the Dow, the S&P. It's holding its support here right now, just about the 109.50 to 110 area. If it fails here, then you're looking lower, obviously back into maybe 103.75 to 104, even as high as maybe 106. So we're looking for that. Again, a little bit of divergence here as well, no different. And if it goes straight over to the VIX, yesterday screamed into the former pivot area of 21, almost tagging 22, which is the other pivot area, before retracing a little bit today. But now I see that window at 18 to 19 was resistance and now may act as some kind of a support, especially with a rising 8 moving average. We now have the 20 crossed over the 50. That just strengthened. It's crossing over the 200 as well. So looking for a big flush in the markets in the near future. The VIX will spike likely through 22. It'll be through the Bollinger Bands, and at that point we'll likely be seeing the put-call ratio into the 1 area. So with that mentioned, here it is. You see, oops, that's not what I wanted. Pardon me. Hold on a second. Let me bring it up again. There it is. There it is. Okay, there. Let me drop that. So we have. There we go. Okay, so you can see the put-call ratio. The blue line above is at 88 now. And rising 45-degree angle approximately. You see the SPY in the middle dropping and rolling over, and we're seeing the VIX at its highs. So it's not until typically we see the put-call ratio above 1 that we usually see that's the capitulatory move. You can see how steep the last one was back in October. And remember, I showed you that in the chart earlier. That's where we had that actual morning star formation. So it'd be kind of the same thing here. We're looking for something that would give us a sign, a true reversal signal when everything sort of lines up. Put call ratio likely above 1. A buy signal, of course, on the candles, on the indexes, as well as the VIX, really catapulting to the upside through the upper Bollinger Band and screaming higher before a sling back that will occur and everything changing direction very suddenly. So that would be the sign of that capitulatory state. That would be that panic selling that we're going to be looking for. When is it going to come? I do not know. No one ever seems to know that for sure, but you have an idea at least and can anticipate a little bit based on what we're looking at here. So keep an eye on this stuff.